Hello everyone. Today I'm presenting Aegon's first half year 2020 results, and I will share with you my ambitions for the group. From a financial perspective, the first half of 2020 was challenging, with underlying earnings for the group declining by 31% to 700 million euros. Earnings in our US business were affected by lower interest rates and unfavorable mortality, which was in part driven by the COVID-19 pandemic. Earnings in our other businesses held up well, supported by lower expenses. Net income was approximately 70% lower, impacted by a charge related to our assumption review in the US, where we strengthened our reserves. Our capital position overall is satisfactory, as demonstrated by our Solvency II ratio at 195% and the US RBC ratio at 407%. However, significant uncertainty remains on the economic impact of the COVID-19 pandemic going forward. Furthermore, we believe our leverage and the volatility of our capital ratios are too high. We will therefore take action to strengthen the balance sheet, reduce leverage, and improve Aegon's risk profile to reduce volatility. In this context, we announce several steps today. First, we will retain the final dividend for 2019. Second, we are rebasing the interim dividend to 6 cents per share. Third, free cash flow in excess of what is needed to cover shareholder dividends and holding company expenses will for the time being be used to reduce leverage and strengthen the balance sheet. And finally, we have implemented substantial updates for key assumptions in our US business. From an operational perspective, I am pleased to see how well our people have risen to the challenges of the COVID-19 pandemic. Our service to customers has continued at a high level of efficiency and care, as our employees have adapted successfully to doing business virtually and supported our customers and business partners. I'm very proud of our employees who really delivered and have demonstrated their commitment to our customers and our company in these extraordinary times. Commercially, the lockdowns have been a challenge, in particular for our agency channels. To serve our customers as best as we can, we are actively managing our product portfolio and increasingly doing business virtually. Digital business models, like our e-commerce partnership in China, are doing well in the current conditions. The Netherlands continues to perform very well with a mortgage production of over 5 billion euro. In several of our deposit businesses, including the UK platform, we saw increased retention rates. And in asset management, we observed positive flows from third parties. As we move forward, it is my ambition and the ambition of the management board to transform Aegon into a more focused, high-performing group. A group with a balanced portfolio of businesses that generates reliable free cash flows and delivers sustainable and attractive returns to shareholders. I know this is not where the company is today, and it will take time to get there. I'm confident, however, that we can get there by focusing on 4 areas. Number 1, strengthening the balance sheet, for which we announced a set of measures today. Number 2, creating a more disciplined, high-performance management culture. Number 3, improving efficiency. And number 4, increasing our strategic focus. We currently operate in 20 countries, and I believe we need to sharpen our strategic focus. This requires disciplined capital allocation and portfolio decisions by concentrating on where Aegon can obtain and create the most value. That being said, we are working hard on our plans to transform Aegon and have started to take actions with more to follow in the period ahead. I look forward to presenting these plans, including our view on future dividends and more detailed ambitions for the company at our Capital Markets Day on December 10th. The theme will be Focus, Execute, Deliver. Thank you.